So, welcome to the panel, Enhancing Digital Assets, Increasing Liquidity and Usage of Collateral, or as Collateral. I'm Sandra, I'm the Chief Strategy Officer at intas.tech, and I'm really pleased to moderate this panel here at short notice. Maybe before we start, or maybe I will let to introduce yourself, and then we will start to elaborate a bit on the topic, okay? Marion, if you want to start.
Thank you. Marion Spielmann. I'm working for DekaBank and I'm responsible for the COO function within DekaBank and the custodian bank. And from that point, I know the settlement process as well as the needs of capital markets very well. And collateral, security finance are business DekaBank is doing since many, many years.
Thank you.
Hello, my name is David Durouchoux. I'm Deputy CEO of Société Générale Forge. And previously, I was CEO for security services as well in Société Générale. Donc we know as well securities business.
Hello, I'm Mathew, McDermott, and I run the digital asset business at Goldman Sachs globally.
Thanks a lot. So since we're talking today about digital assets, maybe we just clarify a bit like the term digital assets, because so we just have a common ground for the discussion. So digital assets is like the summary of everything which is blockchain based. So we have the digital blockchain based security part, we have the payment part, so everything which is stable coins, CBDC, etc. And we have the crypto part, so really the crypto asset part, just to be clear on that in the discussion. So, and since we wanted to talk about the collateral management today and how digital assets could have an impact on the collateral management, maybe we elaborate a little bit before on what are the pain points today in the traditional collateral management. Maybe Marion, if you want to start with that.
Okay. The pain point is of course, the settlement time. You have 2 days for the settlement process. If you have collaterals posted by securities, cash is faster, of course. You're not sure whether your collaterals will settle. Yes. You don't have a view on a day or during the day what your risk position is. And I think also we all experienced stressed market situations, yes. And in stressed market situations, we all have the need to have a clear view on our risk position, as well as the possibility to unwound the collaterals. And I experienced Lehman, and it was a busy time. It was really hard for us, yes, to bring the collaterals to the market, as well as to have the right risk position and where our collaterals are at the moment. So blockchain can change this very, very much.
Yeah, I mean, the only couple of things I would add on that. I mean, I think you're right, the unsynchronized nature of settlement and does create risks within the system. I think the whole fragmentation of collateral across many different sub-custodians is a huge problem. And then I think just, something you probably heard me mention before, but just the kind of the inefficiencies in terms of your use of capital and liquidity. And in a macro backdrop that we see today, the cost of which of both is increasing, the precision of the technology, I think, will have a profound impact. But at the moment, it's quite inefficient.
Yes, I agree with what has been said. Maybe we have as well a big problem in our back offices because we have a lot of typologies of collateral, and so the settlement and the several methods in our the chains are really complex, let's say, to articulate, and so it generates a lot of costs. Which are obviously held by the bank. And a way, let's say, to improve our cost income as a bank is as well to streamline the most possible our settlement capability, our reuse. And as Matt was saying, we have several pools which are fragmented, etc. And so it creates a lot of inefficiencies which are translated into a high level of costs into our balance sheet. And that's a problem we want to tackle through digitalization.
There's one point I want to add, yes. We are also struggling with different cut-off times of markets, which is really a problem for the settlement teams.
But is blockchain able to solve all these problems alone. So when we talk about tokenizing securities, so what else is like missing? Because as I know right now, there's not the mass adoption in a collateral management blockchain based. So what is like the missing piece to really make or to really receive this efficiency you were talking about?
When we were created as a startup by Société Générale, the purpose was to identify new types of business or leverage existing businesses. And what we saw as an opportunity in the tokenization was to have a kind of one-size-fits-all in terms of technologies. It's very ambitious because the market will not shift brutally from, let's say, a traditional way of doing it with CSDs, tri-party agents, etc., to tokenized markets, obviously. But the tokenization is a way to think differently and to step aside and just not call, let's say, McKinsey, and we have a good friend with McKinsey, but we did a lot of mission to improve our processes, etc. Here we have something which is strategically different, completely different, and we have to rethink completely the chain. So it's, for us, as market operator, a big opportunity for the future, even if it's not done yet.
But I also think a lot of this just takes time as well. And I think, some of the things that we've done, and a couple of examples that, again, you probably didn't mention, but the intraday transaction we do with JP Morgan, we can see, and actually there is value already that we're generating from that transaction, but you need the market more broadly to adopt that. And collateral management is slightly different from tokenizing assets. There, the real kind of driver of adoption will be liquidity. But for collateral management, it really is kind of onboarding and actually getting more and more people to actually see and understand the benefits. And I do think that over the last 12 to 18 months, the sheer breadth of the buy side that has started to get involved in the market is now forcing more on the sell side as well. So it is starting to happen, but it takes time. You need to understand the rule books of some of these platforms. The onboarding process probably isn't as slick as it could be because a lot of these companies are quite new, but that's all improving, it's evolving. So I remain pretty optimistic that, over the next probably 12 to 24 months, we'll see a significant change. And even just in the US, look at Broadridge. I mean, they already have, billions of activity. Again, it's not perfect in terms of the model that they have, but it just shows that people really do start to see the benefit of the underlying technology.
I also think it's very like with all new things, you need to use to it. Sorry. But what do I see? Yes, I see that infrastructure is still not established, because it would be better if we could use one infrastructure, or not a too much fragmented one. Yes. I also see that the regulatory framework needs to be built up. That's not true, and we need safety doing our business. I also see that there's a possibility for smaller companies, yes, that if they put their collateral management process on the blockchain, that they will have benefits, because small banks currently don't have a collateral team, so they can't use their securities for financing, and this will open the market also. So we will see a lot of new players if we have an infrastructure for it.
Maybe to add on that, the infrastructure is clearly a key, and the technology as well. What I see as what blockchain can change in this market is digitalization will make, let's say, big actor improve and big platform to transform and to be bigger enough to cope with diversity of assets. So that's the first aspect. The second aspect, which is very interesting in the blockchain, is that the traceability of the blockchain. We know that we can use it, for instance, for ESG topics, and to structure ESG product, etc., and it's being done currently. But we can as well trace, and the question of the repo market is the traceability of asset, the reuse of the collateral, etc. And the difficulty in generating a ESG pool of collateral with precisely identified assets. The blockchain you can use it for doing such a traceability. It's kind of I would say, extra financial reporting, in the collateral management, you can use blockchain for doing that because you have the full chain and the full traceability of that. And that's pretty interesting for me.
And with atomic settlement, yes.
And with atomic settlement, obviously.
You mitigate.
But also just highlighting why that's so important. I mean, being able to actually kind of move collateral T+0, be that for derivative margining or for repo or for securities finance, that just de-risks a lot of the system, because a lot that you have embedded at the moment, prices of the assets that are moved typically are T+1, T+2. So that just embeds a lot of jump risk in the system, particularly when you straddle weekends and bank holidays and the like. And so you can see the potential and the obvious use cases are there. I think the ability to actually kind of, from the green perspective, I think that's hugely important. But that also actually plays out on the asset side as well, where people want to invest in that technology and want to understand the use of proceeds and other key KPIs that firms purport to meet. But in terms of collateral mobility, I think the use case is pretty clear. And I think also you need to start seeing two-way markets develop as well. I think the fragmentation of technology, I think, is inevitable in a market like this that is so new. And I do think over time people will coalesce around a small number of platforms. I don't think one glorious unified platform for the globe is the answer, and it will never happen. But what I do think, particularly with the buy side, the pinch points for them of, as I mentioned, liquidity, adoption, interoperability. And that interoperability, I think, is being forced, and you're starting to see that more and more. And certainly the transactions that we've worked on, there has been interoperability across different platforms.
Maybe to come back, Marion just mentioned that, the regulatory framework. In your point of view, what is the importance or the role of the regulatory framework to make these kind of cases fly, so that they actually really work and they can widespread over the industry? I just asked the question in the panel beforehand because it's a really interesting thing that when Germany have a really different regulation, for example, in comparison with France or with Switzerland. So do you think it's hindering the adoption that we have these fragmented regulatory framework, or is it more something we can learn from and also the regulatory framework can evolve?
Is it as it always is? Yes, because we work in multiple jurisdictions. Yes. Okay, Germany has an advantage at the moment because our government is facilitating blockchain technology. However, most of our counterparties are in UK, North America, France, Spain, Europe, yes, Central Europe. So we need a clear framework for the business, achieving a framework which allows us, like the ISTA framework, to do business cross-border. And I think this will also be part of ISTA, yes, because all the master agreements for security finance are covered by ISTA, so they will have an important role for enabling us doing collateral management via blockchain, because we need to have the rules in the ISTA agreements, and as well we need to change our processes, yes. For the time being, we're doing our margin calls on prices the day before, once a day, and in future we can do this 3 times a day or hours, however, but we need to find a standard for that.
I see.
Yeah, I mean, I think regulations are going to be key, and you do need that clarity. And I think Europe is a really good example, more holistically, where you do have a lot of support and enthusiasm and real understanding of how this can actually have a very meaningful impact across many different facets of the market. And so from my perspective, Europe, I do think is, one of the leading lights here. Look at other jurisdictions. The UK obviously leans very heavily on its common law, and is trying to be proactively thinking how it can be, kind of forward-leaning here as well. Look at the Middle East, you look at Switzerland, Singapore, Hong Kong, et cetera, et cetera. So I do think regulatory clarity is key, but I do think we're starting to see a lot more clarity emerge as more and more people are actively looking to, kind of use the technology. I mean, again, it goes back to the point, would I love to see a harmonized regulatory global framework? Of course. And, BIS and others are obviously trying their best, but realistically, that's not going to happen. So I think it's just how you can really move forward within the different jurisdictions and see how you can make that work.
And maybe coming from the payment side a little bit, maybe David and Mathew, you can elaborate a bit on that, because I think this is really something which is necessary to provide liquidity in the market, is that we can picture the cash lag. So maybe we can elaborate a bit on that, because you issued the bond, or you accompanied the issuance of the bond from the European Investment Bank, and what I have read so far is that it was settled with the CBDC of the Banque de France. So maybe we can elaborate a bit on that and the importance of the cash part.
Yes, sure. Maybe just to add on the regulatory, perfectly true. A lot of people think with the pilot regime that things are done, etc. It is not. It is just the start of the story, maybe too. On the money side, we have the securities leg. There is the cash leg, which is obviously as well very important. And I think that today, the ECB has done really a good job. We have this working group which is live and which makes things move forward. I think it's very, very good for us. I think that we are lacking, let's say, an intermediary settlement tool. Because for the buy side, which is non-target, it's a bit complicated to settle today using tokenized assets. So it works perfectly between credit institutions, between us, CSDs, all the visionaries, etc. So it's perfect, let's say, between the key actors and the big boys in the financial system. But in the end, we have clients, and our clients want to benefit too from tokenized money. So, and that's why our positioning in Société Générale is to be investment firm in traditional regulated, and to have a foot as well in the digital asset world, because we want to test all the digital assets which are non-target, non-electronic money, etc. And from that perspective, blockchain, I mean the basic cryptocurrency world, opens a lot of technology and a kind of free lunch for us in terms of fundamental research of what can be done on the future of money. And I think this creativity, which is really, really strong in this ecosystem, is very interesting. Voilà. And so the bridge between the central bank money and the commercial bank money is as well to be worked out, I guess.
Yeah, I agree with all that. I mean, digital cash is the great enabler, and I think you do need liquidity in the market, and liquidity is ultimately going to come from having both sides of the transactions on chain. I mean, it may be through a trigger solution that the Bundesbank obviously is, kind of promoting. Now, I guess for me, it's the kind of flavor of the digital money that's really important, and we haven't really touched on that. But for the wholesale CBDC is something that's going to be, to me, scalable, ubiquitous, and really can move the market forward. But to David's point, we probably need something that's a bit of an interim solution. I'm not a stablecoin kind of advocate for institutions. I must emphasize institutions, but I do think digital deposits, which more and more banks are now starting to develop, I do think they can provide that bridge. And then it does show, then you can showcase the value proposition of settling DVP, both legs on chain. And I think that then starts to really move things forward quite quickly.
So when we talk about like the whole tokenization part, so we talked about the digital security part, we talked about the payment part. We did not talk so much about the crypto asset part, because I think it's kind of far away, or more far away for regulated financial institutions. But can you imagine that it could play a role in the future when we talk about collateral, for example? That we would have collateral in crypto assets in some point in time, maybe? Or do you think it's more we are more focusing on what can we do with the technology in the traditional area, and this benefit is kind of enough for the financial market for the time being? So
that's a really good question. Yes, I think the first step should be the transmission of the traditional business to the blockchain. Yes, because we have a lot of benefits we can use then, and it's also that putting the business on the blockchain will reduce complexity. Yeah, for example, from my point of from my point of view, we don't need a tri-party agent in future, because with a smart contract and the collaterals on the blockchain, this will be automatically done. There's also the advantage that collaterals can be pooled on the blockchain. Yes, we have a lot of infrastructure accounts, and our collateral sits somewhere in UK or in North America. We can put it on a blockchain, have one view. So there are a lot of advantages. But I also think that we should use the possibility to have a deeper look to enrich the collateral universe, yes. But that depends always on the market price. Is there a market price there? And for that reason, we need liquidity. So that's the circle we have to close.
Yeah, I can go. I mean, I think in terms of kind of crypto kind of being a kind of financial collateral, I think that's kind of a long way off. And I think kind of two reasons, and I'm not negative at all or positive, just objective. I think firstly, certainly for US banks, you know, the use of a public blockchain is not something that's going to be imminently happening, and that's many years away. And I think that's kind of understandable, because I do think public chains need to mature before they kind of entertain the idea of, you know, billions and billions of financial kind of transactional activity. And then secondly, you know, I do think what you'll ultimately kind of deliver as collateral will be down to the nature of the asset, and a speculative instrument probably isn't going to be top of your list. I think you'd be thinking more tokenized money market fund units, tokenized bonds, or, you know, OATs or whatever. So I think then it just becomes a very obvious, you know, selection process.
We've been hybridating between traditional financial markets and crypto sphere, let's say. We took a bond and we put it into a DeFi smart contract. For the sake of it, it works. It's very expensive because of the forex fees, etc. Globally, it works because technologically wise, the bond can be put into this DeFi. The problem is twofold. The first one is there is a question of legal aspects. The finance is laying down, the foundation of the finance is a contract between two parties. So question is, a DeFi smart contract, which would be considered as a tri-party agent? What is the legal personality of that? So with whom are you signing your GMRA or something like that? So that's the first question we had. Under French law, we find something which works, but I think under UK law or German law, it seems very complicated. And the second aspect is the volume. Clearly, the cryptocurrency world is not capable of handling, let's say, 1 day of trading of our desk. Donc, there is this question as well of volumes, which is not relevant. And while this business is a pretty low margin, if you don't make volume, it's not interesting. So I think that those 2 points and the question of the infrastructure as well, liquidity, etc., which has been said, are very important.
Maybe sorry.
At one point, I could imagine that asset reference token will play a role in future.
As in tokenized assets? Yeah, 100%. And I think that's where you get your T plus 0 allocation, where you can de-risk the market.
Like tokenized deposits, etc.
Maybe talking about like the infrastructure part from the banking side. So because we just start, we can get rid maybe of some intermediaries in the process, etc. But what new infrastructure needs to be developed for example, issuing a bond or using digital securities as collateral? So what is new to build for the financial industry if we want to enter that space in a widespread meaning?
I guess there are probably two things, and these guys will be better equipped to answer this than me. But I think one, I mean, when I look at the kind of the tech stack that we have something called the Blip, which is basically our interface between distributed ledger technology. So it could be SocGen's platform, or it could be our own, into our books and records. So that kind of seamless transition into legacy systems key. And I think that's, you know, when you've said earlier, why are people not adopting in the droves, is because people are trying to work out how they can do that. And engineers, you know, are difficult to come by, and this is quite complicated. And then the second thing is, over time, you may even want to think about just re-architecting your entire kind of books and records. I mean, I'm aware of, you know, certain asset managers now are actually looking to develop their whole books and records on DLT, which is pretty powerful. But I think first things first, I think it's getting that interface between the distributed ledgers into your books and records.
Matt's right. We've been trying to hybrid between like JP platform, Goldman, our platform, etc. It's pretty complicated, and I think the engineers are working hard to solve that. Nevertheless, the matter is not technological. I think that the pilot regime opens, let's say, a room for discussion based on a secondary trading, which is completely off-chain, meaning that we can imagine having agreement between big firms doing business, doing liquidity providing liquidity to the market. And if we do so, engineering and let's say all the question of the compatibility will naturally align, because l'intendance suivra, like we say in French, and we have to, always the back office has to align when trading is there, when P&L is there. So I think that the pilot regime, in a sense, is a very good opportunity for us to unite, and then engineer will make what they have to do, and it will succeed for sure.
From an operational point of view, I think we still have missing knowledge in the market, yes. The big players, yes, we all have use cases for security, finance, for collateral management, for issuance, yes. But we still don't have agreed upon a standard, so we need to have a look on interoperability, but that's not for all DLT chains given at the moment. I'm totally with you. We need private permission blockchain to do the business. Yes, to have a governance structure we can rely on. From my opinion, in the next 3 to 5 years, we will see the changes, yes, in the European market, because my feeling is, if I talk to my colleagues in other banks, yes, they are all working on that issues.
Yeah, and I think you're touching on a really good point, and it's something that I spend a lot of time with my team on, is you want to take on projects where there is a very clear commercial driver for doing that. It's a very obvious statement, but it's not necessarily the way this kind of marketplace has operated over the last 5, 6 years. And I think now, just given everyone's under kind of cost pressure, just making sure that everything that you do focus on, even if it's kind of on a more short to medium term basis, can actually deliver positive aspects for all kind of stakeholders in the market. And coming back to the theme of the panel, I mean, collateral management is one of those. There's a very obvious kind of opportunity there, both in terms of the efficiencies, risk reductions, but also creating revenue opportunities.
And maybe the question as well of the repo market, there is the question of the collateralization, refinancing, etc., which is a market as itself. And we should see as well a repo market, and especially driven by central banks, as a big part of the liquidity providing. So the question is not only doing trading, etc., it's as well opening a refinancing operation at the central bank, etc., to digital assets. So I think that there is this question as well, which can be driven by the central banks. They have shown that they are capable of doing it with the digital euro. So I think that the question for the liquidity is to have this circle, this ecosystem, which is needed for actors to onboard on this technology as well. It's not a matter of doing here money, here issuance, here a bit of infrastructure. It's a matter of having a trading which is complete, and the reuse and the issuance and the issuers, etc. And this ecosystem is not yet completely there. We see it.
I actually think that's, again, that really is a fundamental point. And one of the things that I think all of us aspire to do, it's all very well doing an issuance here, but then how do you repo it? And so actually the creation of marketplaces is the fundamental kind of objective, certainly from our perspective, with the liquidity, bringing in more players to actually kind of create something that's analogous to what you trade today. So I totally agree.
And do you think that the DLT pilot regime, David, you just mentioned that, will really help on creating these kind of marketplaces, or is it more in the hands of the big financial institutions, of the big exchanges, for example, to develop these kind of infrastructure?
I think that the question in the financial sphere is that it is a regulated business and heavily regulated. So if you don't have the regulatory in place, you cannot move. We cannot move, and we are banks, we are regulated, etc. I think that the pilot regime creates the legal assurance for us, for our management, and for our clients to be sure that we can develop something. And then I think it's the role of actors like us, the sell side, to go and seek some partner and say, okay, guys, we have to do something. It's not a big deal. Voilà, and we can take it from a very big market infrastructure, or like we are doing since the start, more as a fintech with very creative people, and to achieve something which works, which is not perfect, and to drive it until the end of the pilot regime. And we have 5 years to test it, but we have to start pretty soon.
Yeah, I think it provides a catalyst, because I mean, a good example is the IB trade that we're all involved in, and we issued that natively to our platform. That didn't need to be registered or licensed as a CSD, but what it did mean that we couldn't make a secondary market using trading venues. And so by being able to actually get into the EU pilot, you can transform that. And also the ability of the provider of the liquidity will also be able to provide us liquidity for the entirety of the transactions that we look to do. So that suddenly kind of transforms and addresses a lot of what the buy side have been focused on. So then you can showcase actually how the market will operate within the EU pilot. And then I hope we don't need to wait 5 years to kind of have some regulatory change. There's something that could be kind of looked at in parallel. I think that's the key thing.
Repo business is mostly done bilateral, so the DLT pilot regime is not possibility to foster that business from my point of view. And I think the DLT pilot regime is very, very small, yes. And I ask myself why so less market participants try to establish an infrastructure within the DLT pilot regime. And a simple answer is the uncertainty. We don't know what will happen in 3 years, yes. It's not a revenue case at all, so...
I a little bit disagree with that, because I actually think it shows the value proposition, which is kind of key to all of this. And like I say, if you can actually have the regulations kind of run parallel and so they change, then you can actually kind of step out because people are confident and comfortable with the way that it operates. So, you know, I think there's nothing that's truly perfect or utopian, but it gives us something to work with. And it's going to be the same in the UK and other jurisdictions. And you need that, because in 3 years' time, you can't be sat here talking about the same thing, because most digital asset businesses will have closed down, right? And so this is all good, positive progress.
I was very happy when the DLT pilot regime was disclosed, yes. But what I don't see is that it's used. And that's the problem.
Well, I think people are taking time. I mean, like, we're involved with 2 or 3 people who are applying at the moment. So these things just naturally take a little bit of time. I mean, everyone's quite impatient and wants these things to happen quicker. But I think once you actually get the wheels in motion.
So
are you applying?
We will have a look in January.
There you go.
I mean, it's a good news that there is no so much actors applying for the pilot regime license, because precisely it's the problem of fragmentation that we have today on the primary market solution. So we absolutely want to avoid that. And the question for us as a sell side is, how do we unite under a small set of platforms, standards, etc., to create this liquidity, unless it will remain just for the sake of it. We don't want that. We want to do it, to use it to do business. So for us, it's perfect. It gives legal assurance, and we are big banks. We can handle a few years, let's say, to invest. And if we show and if we prove that there is value added, it's okay. It will be open after 28, for sure, if it works.
And the point I always make is, I mean, if you think 2 or 3 years ago, there was literally no kind of clarity in any of this space, you know, with probably the notable exception of 1 or 2 jurisdictions. That is changing fundamentally and very quickly. So again, you have to kind of take the positives, because it is moving in the right direction.
I think that's actually the perfect closing sentence, to be honest. Do you have something you want to say to the audience, just one key takeaway or something you want to address? Otherwise, I think we are perfectly fine with that last statement. No?
Fine with that, unless there's any questions, obviously.
Yeah, exactly. So we are here today. If you have any questions, so please hesitate to come to us. Thanks a lot.
Many thanks.
Thank you.
Thank you.
Thank you.